So after hesitating at the open, the market started to gain some steam, sending two of the three major indices to all-time highs. The S&P 500, in fact, the 13th new all-time high since the inauguration, the 22nd all-time high since Election Day. NASDAQ, even better, 22 new all-time highs since the inauguration, 36 new all-time highs since Election Day. Now, the number of new highs is a critical story that everyone needs to heed. You know, I got to tell you, I'm so frustrated with would-be investors who always tell me that I want to wait for the pullback or the crash, and then I'm going to jump in, as if this is surfing, and they really would have the nerve. See, I preach investing in great companies. They're executing, expanding margins, taking market share, executing on products, pipelines, also on financial expectations. Sure, I got to tell you, these stocks can, of course, get ahead of themselves, and they do get hit from time to time, especially when the periodic market crash comes out. But here's the rub. You're not going to buy the dip, okay? I'm going to let you know right now. In fact, when the market dips, you're going to run for the hills during a crash. You need to consider the exact opposite way of thinking, investing in companies that are actually breaking out to new all-time highs. I'm going to give you, for instance, two examples, in fact. The two top winners in today's session are names that I've pounded the table on for years right here in Fox Business and to my own subscribers. More recently, they have come on like gangbusters, but because, you know, they both, in fact, became screaming buys on the same day. The first one is Mercado Libre, which is, my Spanish isn't good, but it means free markets. Closed at $199 on February 23rd. The next day it closed at $208. $9, you would say, oh, I missed it. Well, today it finished at $275. Universal Display OLED, or organic light emitting diodes, same day, closed at $67 on February 23rd. The next day, $81. Who would chase a stock like that? Except now it's $111 a share. The bottom line is you wouldn't have bought these stocks, and the truth is you probably could still make money if you bought them on Monday. Here's the moral of the story. You got to stop selling yourself short. Without any exposure to the greatest money-making machine ever, I'm talking about the stock market, guys. Now, as far as the market itself being overvalued here, there's no doubt that several metrics are suggesting that it's gotten ahead of itself. The S&P 500, in fact, the forward PE ratio is 17.6. That's well above the 5-year average of 15.1, but nowhere near the levels that have preceded major market crashes in the past. I'm looking for a wave of consolidation as this market continues to move higher, and I bet most of it will be done with cash, not even stock. I have a list of 4 potential takeover candidates, but I'm adding to that list as well. I've got to tell you something. I'm excited about the breakouts also, and I want you to be excited about them too. Make sure that you go to my website, wstreet.com. You want to get the daily market commentary, and I'm going to have some ideas for you there because ultimately I keep telling you it's time for you to make your portfolio great again.